Hello, traders. Welcome to another daily analysis. Today is January 3rd, Tuesday, but we are 15 minutes into January 4th, Wednesday. So we might just do the analysis for the passing agent session as well. Now, this is technically the first real trading day of 2017, and the news from last agent session was the positive Chinese manufacturing PMI. It was actually very positive for China, and that data, of course, once again, it's a very good news for Australian dollar. Now the tier 1 data in London session, it was the manufacturing PMI, and we were personally, I was looking to trade it with a negative surprise, but however, the result came out actually it was a positive surprise. That, of course, supports British pound versus weaker currency like euro. The German inflation and French inflation will also hit a new high since 2013 and 2014 respectively. And of course, the German also have a positive employment data. So overall, it's a quite positive picture. But if you look at detail, the reason for inflation was largely due to the energy price has picked up, which is the oil price. So it's really not exactly a solid evidence for economy recovery, and so it's still quite slow for the economy, the European economy as at large. And the GDP price from New Zealand came out in New York session. It was actually a negative deviation. We actually have a minus 3.9%, and that was a really negative number, the most negative number I think since the last couple results. So this, of course, is not a good news for New Zealand dollar. I did not trade it because as mentioned, this is on schedule, so it's hard to time it unless you really sit in front of the screen. Otherwise, you don't know when it's gonna come out. It's always tentative, so that's why I don't like to trade this kind of data. Another data is the ISM manufacturer PMI from US, and that was a positive number, not a positive surprise, so it didn't provide me an opportunity to trade, but it's just a very good start for US. As mentioned, that 2017 US dollar should still remain a rising star, should still be the most positive currency, and now the data has really backed it up. So really looking forward to see how the new government is going to do after it takes office, and then what's that gonna affect the whole economy. Sentimentally, equity market will actually largely green to give a risk on sentiment, a good start for the year. The oil was actually down, so the oil actually went up to $55 per barrel yesterday. And the reason is because the OPEC agreement is due to take effect this week, and if they follow through, that means they will cut the output. And now it seems that Saudi Arabia already is raising its oil price in accordance with the strategy to cut the supply. So it seems that he's doing what he says he's supposed to do. So that's why people are really priced in oil price. Now, why do we have a huge drop today from 55 to 52? It could be a fact of a strong dollar. That's really the only fundamental reason. And a strong dollar, of course, is going to hurt the oil price because oil is denominated in US dollars. So that's really going to take effect for 2017 if dollar continue to remain strong and keep climbing up. And that's really going to pressure the oil price. And so since we are moving to agent session, the nearest agent session, January 4th, the real data is the manufacturer PMI from Japan, and it was a very positive number, to signal a fast pace of expansion in December. So that the economy might be really recovery slowly in Japan. But however, it's still a relatively weak recovery in comparison with any other currency. So it is still a quite negative currency for us. So that's pretty much, for now, for the fundamental news. what's going to happen today is we have the construction PMI from British pound, and I'm looking to short pound if we have a negative deviation. So I'm looking to sell cable if we have a negative deviation. And in the afternoon, we will have FOMC minute coming out. And depending if you want to trade it, I personally don't like to trade it because it's really not a straightforward data to trade. So really, the only thing it will be the construction PMI from British pound for the next London session. For me, that is tradable. Okay, so let's take a look at our currency pairs. Now, the first trading week of the year is really, very similar to the last trading week of the year. It means that since you have to fade. You have to think that people are just coming back from holiday, things like that. It will fade it in slowly, so things will slowly pick up. But it's just not going to be that not much liquidity, or it's not going to be that much regular in the first few weeks. So just be careful. Trade carefully, and basically, just trade carefully for the first 2 weeks. So let's take a look at euro. So euro pound today, of course, it's a very small candle, but it is it went down basically, and I assume on the news of the positive British pound data. However, it soon basically went up to erase all profit. So again, that's why if trading the UK data, I'm really only looking to sell it, to short it. It's because the market in general is just not in favor for British pound. So although you do have a very positive data like this, but people are just not interested to buy pound, or even if they do, it's always short term. So for me, as a daily swing trader, really a long-term view or in a daily view, it's really to sell British pound. But we just need a momentum. We need a negative data to push it through. So that's what we're waiting for. Euro Swiss, another down day for euro, and I think will be the same thing for euro dollar. Yeah, same thing, another down day for euro dollar. And looking at the tails, you can know that we're actually tasting 1.0350, which is quite significant area. 1.3 will be a very low area, but if you look at this line here, we really couldn't really close below 1.4 too much. We closed in December 20th last year, but any other days we all actually try to basically close above that. So will be a significant thing if we start closing below 1.04 and continue to stay below. That will really signal a new low for euro, and that's what we're looking forward for it to happen. That's for euro dollar. For euro AUD, again another down day for euro AUD. Euro CAD, it's the same thing, another down day. Euro New Z and euro yen. So pretty much, as mentioned, that euro is really one of the weakest currency, fundamentally speaking, for 2017. Japanese yen, of course, came at pretty much the same weakness as euro. But I'm personally more bearish toward euro. That does not mean I'm going to buy euro yen. It just means I'm more bearish. It doesn't mean I'm going to sell euro yen. It just means I'm still more bearish toward euro, just because I think there's more uncertainty lies ahead of us in 2017 for euro. Japan, of course, the biggest issue is the economy, is the deflationary environment. That's really for Japan, basically, the negative side of its economy. But beside from that, politically speaking, it's very stable. There's no populist movement. There's not much terrorist attack. There's not much, Japan zone collapse, things like that. But Euro, on the other hand, has a lot of this kind of issue. And that's why there's more uncertainty politically, geopolitically speaking, for Europe. And economy-wise, is also not picking up fast enough. So that's why I'm still more bearish toward Europe. Let's take a look at British pound. Pound Swiss, again, same picture. You have an update because the positive data, but it soon goes back down. So that's again to signal basically the weakness of British pound in terms of the sentiment. The people really not looking forward to buy it. It's a down day, even though you have a very quite positive manufacturing data. It's not really something that's going to lift up traders' confidence toward UK. Swiss franc, Japanese yen, really not much going on. Dollar Swiss, it's really going to be a continuation of strength into US dollar, but you might not see that too prominently just because we're just starting basically. Now dollar yen, again, trying to tasting this 11875. That's really the previous high, which providing to be a strong this line providing to be a strong resistance. Now this might be a double top, and it is a double top if we basically dropped and break below 116.50. So you can take a look at this zone. See, it's we breaks above this line and keep going up, or we're going to retest 116.50, or we're going to break below 116.50. So it's all possible, and I'm not surprised because it's really just a price action going on here. But in terms of long-term perspective, of course, we are looking for a signal for us to buy into dollar yen. I don't have that signal yet, so we just keep waiting. Aussie Swiss, again, it's an update for Australian dollar, and largely due to the data from China, from the positive Chinese data last Asian session. Aussie CAD, Aussie Newsy. I actually forget it's near 12 o'clock, so my platform might be refreshing. If that's the case, I'll have to stop earlier. So let's just quickly go through it. Aussie yen, it's pretty much going to be another positive data. So CAD Swiss, all right. Sorry guys. Unfortunately, it's 12 o'clock. So that means sorry about that. I forgot the time. It's 12 o'clock. So that means my brokerage is refreshing right now. It's gonna take probably 10 to 15 minutes. It's really depending on, maybe sometimes it's 5 minutes. But nevertheless, let me see if I can get something. I have this free trading view. Trading view. This is a free charting software. It's not really something I use to see my chart, because the closing is a little bit different. But nevertheless, I use this as the backup, really sort of backup to to see stuff. So where were we? CAD Swiss. So CAD Swiss, it's an update for Canadian dollar. CAD yen, same thing. Now the candle might be different in this platform, but nevertheless, we just try to see what's going on. So really, we're really in a range bound for New Zealand Swiss, New Zealand dollar again. Really, New Zealand is actually should be a down day. It is a down day, and really, it comes down to the GDT price. That was a surprise. A negative deviation, and that of course is going to keep pressure New Zealand versus US dollar. And New Zealand CAD, it's the same thing, and New Zealand yen is really nothing much going on here. I actually brushed through Aussie New Zealand. This one is very interesting. So, this is a good green solid candle day for Australian dollar today. Now, it's really the fundamental is in play. You have a strong Chinese data to support Australian dollar. Also have a negative GDT price, negative dairy price to pressure New Zealand dollar, and that's why you have a very solid green candle today for Aussie New Zealand. So now the next resistance is actually very close. So that's pretty much it, guys. Let's see if my platform is back. So as mentioned, Wednesday today really looking to trade construction PMI if we have a negative deviations. And let me give you that negative deviation. Actually, you know what? I'm gonna type in. I said I was gonna type in yesterday. Sorry about it. I forgot about that. I'm gonna type in my the article that comes with the trading video, so you can take a look at. I'm gonna type in the maximum and minimum number. So if you want to trade it, that's the number you should look out for. And other than that, that's pretty much the only data that's tradable for Wednesday, January 4th. And really nothing much else to talk about. I was at Aussie News. Yeah, this is what I was saying. A very green solid day. A very green solid day. Okay, so that's it, guys. I don't have much going on in terms of news-wise or price action-wise. Really, a relatively good start financially, but again, it's just a couple days only. So just take it slow, and wish you had a good start of 2017 in other areas of life. And if you find this video helpful, if you have any question, feel free to let me know. Otherwise, I'll be back tomorrow with another daily analysis, and looking forward for that. Thank you very much. I will see you tomorrow. Thank you. Bye bye.